Good news for your shareholders. The dividend is up, and you are indeed, I suppose, talking about a very successful 5 years to come in terms of investment. My question to you on the dividend, first of all, how sustainable is that uplift in the dividend? Is this a new benchmark for investors from Vonovia?
It absolutely is. Anna, Manus, thank you for having a chance to talk to you. The 112 is what we delivered in 2016. There will be a 124 dividend without acquisitions in 2017 already built in the system. If we add the Convert acquisition on top, this is definitely exceeding 130, and we don't see that the system of more efficiency, more organic growth, more quality in our top line stops. This is in a tumultuous Europe, a rock-steady stock to bank on.
Rock steady, you say, Stefan. Let's talk about pricing, property prices. What are your expectations for property prices? They've been doing very well in certain cities, the likes of Berlin. How sustainable is that?
Values are going up. There has been in the last years a significant catching up effect. So what you've seen, for instance, in the UK and in the rest of Europe has not been replicated in Germany in the last 20 years, and therefore we had to play catch up here. Germany has an imbalance of supply and demand. Berlin is a hotspot. Berlin is therefore growing significantly. The value increase last year in Berlin in our own values was 28%, and our competitors are in the same range if they are exposed to that city. So prices are increasing. Do we see a bubble? There will always be pockets which are overheating. We also see that valuations in Berlin are to a certain degree not justified by performance at the moment. Question is, can performance catch up? In principle, I think it's still stable, but it's not a cheap market anymore.
Stefan, well, depends if you look at prime London as well. Some people say there's a bit of value there at the moment, Stefan. Let's talk about your proclivity to do deals. You say the dividend is 124. That's the implied dividend without any deals on the radar. I'm getting the sense from the news flow that you put out this morning is that you don't want to grow outside of Germany. Is that my takeaway from these numbers? You're not in the market for cross-border transactions, even after the Austrian deal?
No, the Austrian deal we bought because 90% of the Austrian assets were in Germany. We have an agreed upon strategy, which clearly is to stay domestic with our assets. But it would not be truthful to say that we are not looking. I think it's a matter of course that a management team is analyzing also business models abroad. There is nothing on the charts, nothing in the strategy, nothing in the budget for that.
Are you confident that you can continue to increase rental incomes at the current rate of growth? Are those sustainable, Stefan?
I'm confident that we can even exceed that. So we have a guidance of 3.3 to 3.6% out at the moment on an organic growth pattern. I'm expecting to exceed 4% in the year 2018. This has a lot to do with our investment and modernization program, which is a lot of blood, sweat and tears, but very helpful for our customers and also for our shareholders.
Stefan, obviously you referred to Germany being a rock-solid property market, but the politics is never far from anybody's mind. As you look at the landscape of German politics, how concerned are you about populism pushing through? How concerned are you about Merkel still being in charge?
No, we're not concerned about the political landscape in Germany. Germany has a long tradition of having coalition governments, which tends to do the country good because we are very consensus-driven. We are also seeing that Germany becomes very focused on federal elections and is usually more conservative and more in the sense of conservative. More conservative in these type of elections than in regional or European elections. I'm not too worried.